Hello, Maverick traders. Welcome out to your currency midweek for March 29th, 2023. I had some internet issues today, so this is getting out a little bit later. Stocks are moving higher overall, and let's just get into it. So, bad news, but good price action is bullish for stocks. It's not bearish, right? People hearken too much to this, and I always tell that parable of the Chinese farmer where he's got a son, he's got a horse. His horse runs away, and the people from the village say, "Oh, that's terrible news. We're sorry to hear that." And he says, "I don't know if it's good news or bad news." The next day, the horse returns with two other horses, and the people from the village say, "Wow, that's great news. You now have three horses." And he says, "I don't know if it's good news or bad news." His son goes out to break one of those horses and train it. He falls off and breaks his back. The people from the village, "Oh, it's horrible news. We're sorry to hear it." Well, once again, his response, "I don't know if it's good news or bad news." The following day, war breaks out. They come to get his son to go into war. He's got a broken back. He can't go. The people from the village, "Wow, that's great news. I don't know if it's good news or bad news." You see how this could go on and on and on, where what you think is good news is actually bad, and what you think is bad news is actually good. You think about that in life and in trading, and it's very much a true factor. If it were so simple as good news equals things go up, everyone would be a bazillionaire, wouldn't they? We would just all make money and we'd all be happy and fat, and it would just be beautiful. And that's just not how life works. We have to think about, well, what's already priced in? What are the counterbalances? What are the offsets? What are the things that we might look at it as quote unquote bad news? And that's why I put that in parentheses. The market thinks it should be bad news, yet stocks are up since the banking crisis occurred. So what's actually in place? And well, while this is a crisis of sorts for banks, it might be over already. Now, you say, "Corey, that's crazy. How can you say such a thing?" Well, listen, it's only a bigger problem if there's contagion and there's a run and a run and a run and all these banks start failing, and that's just not happening. The people that wanted to move their money have moved. Most people are not paying close attention to this. Most people are not involved heavily in the financial markets, and it was a news story that is now moving towards the back page. Now, it has the risk, it still could be a domino that topples others and so forth, and it could still have some negatives, right? The banks could get more conservative, fewer loans, less lending means a slowdown in the economy. But isn't that what the Fed's working on? And so the counterbalances are the Fed has already hiked rates and is now probably much closer to stopping. The yield curve, which was inverted, is coming up off of that inversion. This is disinflationary. It should pull inflation numbers down. The overall economy does better with lower rates. Stocks are up since this crisis began. You see how there are, I don't know if it's good news or bad news, it's just news. And the market is telling you that there's actually some offsets and that this crisis, as quick as it came, it might be gone. US dollars in a short-term downtrend. This is a safety trade. So people rush to the dollar instinctively. They rush to treasuries, which, by the way, we talked about a couple of weeks ago. Them buying up treasuries actually helped the banks. It was part of what was creating the crisis. So the fact that people went defensive and bought treasuries pushed yields down and bond prices up, again, relieving a lot of that stress that was in the market. If the safety trade is truly coming undone and this banking crisis is over, gold, silver, Bitcoin, and other quote unquote safe haven areas are vulnerable to a much bigger move lower. I suspect that's what should occur over the next couple of weeks. Now, have they hit their top and they collapse? Not necessarily. But for a trade, should they continue to work their way lower? I think so. This might be a rolling recession, meaning people panic about a recession. But what's a recession? Does it really matter if you're growing by 0.5% or minus 0.5%? Probably not. But the fact that you're minus would mean you do that for a few quarters in a row. Now you're in a recession. It's just not that big a deal. It doesn't mean that the economy's collapsing and that assets are collapsing and that companies are just falling to pieces and going bankrupt. It's not what a recession is. In fact, historically, most recessions are fairly mild. The stock market goes down 20 to 30%, which, by the way, it already has. And so it's very possible that this recession is more of a rolling recession. It hits different sectors at different times, and that certain sectors get hit harder than others. Overall, inflation is likely to decline based on annual CPI numbers. Let me explain what I mean by that. I can't pull it up because we don't have the internet, but I'll do a drawing. So if we go to forexfactory.com, at Forex Factory, we can pull up the Fed funds. We can pull up CPI. We can pull up different numbers. If you go and pull up the CPI and you look at how it's been reported, the annualized CPI is based on the past 12 months of numbers, and you add them all up, and that's your annualized CPI. What's significant about that? If you go back a year ago and start looking at April, May, June, July, the months we're going into, we had some CPI numbers that were 1%, 1.1% monthly numbers. Those numbers are going to be leaving the annualized calculation. Assuming that we're going to put in lower numbers like 0.2, 0.4, that is a drop. If we put in a 0.4 and the prior month, a year prior, was 1%, your annualized CPI just dropped by 0.6. If you put in a 0.1 and the year before was 1.1, your annualized CPI just dropped by a full 1%. We're going to get rid of some huge monthly CPI numbers from this time last year, and we're moving right into that. That's good news from the standpoint of what you're going to start seeing with inflation. It's just simple math, is you're going to start losing some big numbers from the calculation. On the economic report side, consumer confidence at 104 versus 101, pending home sales at 0.8 versus minus 2.9. Weekly performance, as we said, the S&P, the Dow, the Nasdaq, they keep working their way higher. Crypto and gold are already seeing a little outflow. I would expect more than that. Oil up big, and oil is more, it kind of moves to the beat of its own drum. So let's take a look at currencies. The Japanese yen down big in defensive posturing. If my thesis is right that a lot of this safety trade is coming unwound, Japanese yen should go down. Dollar should go down. Swiss franc probably goes down. And you get a bounce in these more risky currencies. That's what's happening this week. And this should be just the start that should play out for a couple more weeks. I'd expect crypto generally to go down as well. For the rest of this week, we've got final GDP out of the US. We've got GDP out of Canada, some PCE, price index, and so forth. All right, let's go live to the markets for a bit. The S&P 500, you can see if we zoom in here, is now above the 50-period moving average. It's above the 20. The 200 is not on the chart, but it's down here. So the markets are actually moving higher above all moving averages. That's true across the board. In fact, the Nasdaq is even stronger than the S&P and has been upward trending for the past couple of months. So we are in a bullish market move in the midst of what is a bad news environment. And so what's interesting about that is, again, the price action is kind of the trump card. Over the weekend, in our trading room session that we do every weekend, Rob and Darren were kind of looking at it as, well, who's going to win, the Bulls or the Bears? It certainly seems the Bulls are winning out. If we go into our currency pairs, you can see the dollar has been on a downward decline. It's right at about that 50-period moving average. Right now, you can kind of look at it in terms of the dollar is going down like we talked about, in kind of a flight out of defensive currencies, out of safety. And that may have a little bit more to go. I'd expect almost a little bounce and then maybe a further decline is possible. Japanese yen is selling off after a flight to safety. I liked the yen. I liked it the past couple of weeks for an upside trade. I didn't really like it coming into this week because I've been optimistic. I feel like the markets have done the heavy lifting. They've shaken off the bad news. I think the banking crisis is pretty much past. Remember, the risk is that there's more runs on banks. And since that's not happening, this could be very short lived. Sure, banks might lend less, they might get a little bit conservative, and that can slow the economy. But again, like we talked about, if the banks don't have continued runs on them, they're fine. They can hold those assets to maturity. It's not as big a deal. As we look at the others, euro still trending higher. Swiss franc should start to deteriorate. That's kind of the defensive currency. So it should be a little bit weaker. You can see money flowing into pound and especially CAD this week with oil being up strongly. The Canadian dollar is zipping higher. Now, you know I don't like to buy breakouts when there's a lot of overhead resistance, so I'd wait on the next dip to buy in CAD. I'd wait in the next dip to even think about Aussie or Kiwi, although those are clear laggards. So out of the three more aggressive commodity currencies, I much prefer the Canadian dollar. Now, if we look at possible trades, I've talked about that I don't mind the idea of buying CAD, but I wouldn't do it against the US dollar. In fact, US dollar having sold off quite a bit the last couple of days is pretty darn close to a Bollinger Band buy setup. A little bit more downward pressure, it would hit the lower band, still be above the 50 MA. So that would not be my preference. I'd much rather go a little bit counterintuitive perhaps, but look at shorting something like the euro against the CAD. And I would do that on the next bounce. I think we may have a false breakout here where it surged above and now it's fallen back below. And I would use the next rally to short into. And I'd imagine somewhere in, call it the 147.67, 147.70, that general area. This is what we would call a trapped bull situation where bulls piled in here and now it's failed at that level and they're trapped and you might get further declines. The reason I don't want to play the momentum to the downside, there is underlying support. So again, when that happens, I short the rallies. I'm not shorting a lot of downward spikes. Instead, I'll use the bounces to get short. But I'm looking at Euro CAD. It's a little bit counterintuitive, but I would be looking at something like that. Maybe even CAD against the Japanese yen, where you say, okay, on the next dip, I could look to buy CAD yen, maybe down again 96.80. So I don't think it's ready right now. If you're looking to buy CAD, it's made a nice run this week. It's already gone up quite a bit. I wouldn't want to chase the momentum as much as I would play for the next pullback to set a higher low and be a zigzag. Try to buy that zag. Try to buy close, kind of at or near the lows, and play the next wave of upside. That's how I would be thinking about it. As far as, again, US dollar is just so stretched. If we look at Euro USD or something like that, um, would you want to buy this chart? Probably euro goes up versus the US dollar, but it's just not a pairing. I mean, maybe back here I could have bought the dip, but up here just feels like US dollars in somewhat in no man's land against a variety of these currencies. I sort of prefer Japanese yen to the US dollar, so I could see getting short USD yen right here. And it's probably set up. You have the sell-off, you have the ricochet back underneath, now declining moving averages, and this is where it should stall out and start to make another push to the downside. So if you wanted to short dollar yen right in this area and kind of play it to the downside, that is a possibility. But it's a little bit counterintuitive, again, how the markets have behaved, how they've been moving. But I think it's counter trend, which is always hard, but the counter trend move is seeing stocks go up and they're reversing into uptrends. So things like gold, silver, Bitcoin that are actually in uptrends are vulnerable to downward trend moves. When you have a trend reversal, which is what the S&P is suggesting right here, right? You're above all the moving averages. You've gone from downtrend to uptrend in the short term. Everything that's on the other side of that is vulnerable to the same move inversely, right? While stocks were going down, something like gold was doing quite well. Now that the S&P is going up, something like gold could go back down. And so that's kind of how I look at this in terms of currencies. We usually want to trade with the trend, with the momentum, with those things as kind of a wind at our back. Right now, you may have to think outside the box a little bit and say, okay, I still want to go with the trends, but maybe things like the US dollar are going to reverse back into downtrends. Maybe the yen is going to move into a downtrend. Maybe things like CAD, which had been downward trending, are actually going to uptrend for a while. That seems to be the way that rotations are happening in the broader markets. If we look at crypto, again, it's strong, it's healthy, and this looks like a high base, should break out. I wouldn't get short Bitcoin right here, right now, but watch for the possibility anyway of a false move, a false breakout. If it tries to break out here and then that fails, you'd have basically the bull trap, right? These bullish traders that got sucked into buying are now trapped and it reverses hard. From false moves come fast moves in the other direction. Now, I don't know if Bitcoin will have a false move, but again, I think given what we're seeing in equities and such, if you look at the domino effect, if equities are blasting higher, if there's rotation out of things that are defensive, that would be a vulnerable spot for Bitcoin, gold, silver, etc. As far as currency pairs that I like, again, I would play a little bit counterintuitive where I would actually think that this is a bright spot where maybe CAD bounces. Aussie and Kiwi look horrendous. They look terrible on the chart, but maybe, just maybe, they're going to go through an upside correction. I wouldn't want to buy these for very long, but for the next week or two, could we correct a bit further to the upside? That seems to be what's materializing. For the rest of this week, we have a currency recap coming out tomorrow, and then, of course, the trading room coming out this weekend. As always, trade with good position size. Try to find the things that are moving and that have some momentum behind them. Thanks for joining us. We'll see you next time.